What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a continuation of the bull rally and we're very close to brand new all-time highs. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we went up 0.21% and we're getting very close to that critical resistance level at 436. Now remember, this is a strong bull market and we're back to having the full bull trend with the bullish price action. Our price action is well over the 5 EMA and we're starting to regain that strong bull trend where the moving averages are going to create separation. So I already know a lot of you bears are thinking you're going to try to short this market at resistance and it's going to go to negative $1,000 and you're going to make a ton of money. Don't do that, because what could very likely happen in this bull market is we break out, we start running into the 440s, and eventually we'll come back down and retest that level as support and continue to bounce and head higher. If you start shorting now and we continue to run higher, you'll be underwater in your short positions and you'll never actually turn a profit because it'll never go lower than where you started to short. So believe me when I say this, and I've been saying this to you bears for a very long time, stop trying to call a top and stop trying to short a bull market. If you're very good at shorting and you know exactly what you're doing and you always have a profitable short position, I don't believe you, but go ahead and keep doing it. Shorting a bull market is very difficult to do. And most of the time, if you're shorting with put options, all of the premium is already baked into the move. And even if you eventually are right, you're still going to lose money. So don't even bother trying to do it. Now, again, going into these resistance levels, you still have to be cautious because there is always going to be a possibility we see a pullback. But we still have so much critical support just below, and our 20 simple moving average is now going to be at 432. So our critical support levels, which will be our strongest support, will be 432, 430, and 428. Again, those are very strong support levels. So if you start to see them breaking down, that could mean the market is going to roll over. But right now, there's no reason to believe the market's going to roll over because we're staying objective and we're following the price action and the trend. And both the price action and the trend are still bullish. So look for resistance at 436, our previous all-time high at 438, and then our price target at 441. Remember, 441 is our price target as long as we have the bullish trend, which we do. So pay attention to that price target, and the next possible pullback could come when we get to that level. On the NASDAQ 100 triple Qs, we were up 0.66% today, and we continue to see the triple Qs breaking back above that support trend line. That support trend line will be another strong support as we continue to climb higher towards the price target at 367. So we're back above closing all-time highs, so this is obviously a bullish breakout for the triple Qs. On closing prices, the triple Qs put in a brand new all-time high today. We still haven't taken out the intraday all-time high, which is just above 365, so look for that level to act as resistance. You'll have support down here right around 362.7. Our 20 simple moving average is above 358 now, and we still have our critical support way down here at 352. If we start breaking below 358, that will be a warning sign that we could be coming back down to the 50 EMA around 348. But again, don't assume anything. Follow the price action, and if you see the price action breaking down, you will then know it and it'll be objective and you'll be following the price action instead of guessing. Don't just assume because we're coming to all-time highs that we need to see a huge pullback. That is obviously not always going to be the case. And if you're trying to assume a pullback is coming and you're trying to short this very strong bull market, you will continue to lose money, and I'm trying to help you get on the right side of the trade so that you don't lose money in this market. Eventually this market will roll over, but we have not yet seen that. We still have the bullish trend and we still have very strong price action. So look for the triple Qs to be testing our price target at 367 very soon. On the Dow Jones, we were pretty flat today, only going up 0.08%, but we did close above the resistance level at 348. We still have a gap down here at our critical support around 346, so watch that support level very closely. Below 346, we have support at 343 and 341.7, with upside resistance at 351, and breaking out above 351, we'll have another price target at 353. So the Dow Jones still has the bull trend and still has the bullish price action, so all three indices have full bull trends with bullish price action. That is a strong bull market, and it goes hand in hand with that summer bull rally that I've been talking about. On the Russell 2000, we did see cooling off today, and remember I told you to be cautious of this with the Russell. The Russell has a lot of bearish trending, and the bears will continue to attack the Russell because it's going to be much easier to do so. The bears have the advantage of the trend in the Russell 2000, and they're very close to having the full bear trend because that 20 simple moving average will start crossing below the 50 EMA very soon. So the bears will continue to raid the Russell 2000 until the price action breaks above 224. As you can see, there was a hard rejection at that 222 resistance, and we're back below that support level at 219, which increases the probability we could be coming back down to retest support at 215. So watch critical support at 215 and 209 with our upside resistance at 219, 222, and 224. Remember, IWM, the Russell 2000, need to break above 224 to start scaring away the bears. On the Arkk ETF, we were down 0.77% today, which is really not that big of a surprise because we did have that nice monster bull rally the last 3 days. Remember, Arkk looks like it could be finishing an ABC correction and starting to head back higher. We're above 120, which is our critical support, so continue to watch that support level closely. We still have strong resistance at 124 and 128, and if we break below 120, look for support down here at 116 and right around 114. Again, Arkk does not have the full bull trend just yet, but coming out of a correction, it could be starting to go back into a bull market very soon. So look for potential to break out to the upside and continue to form a bullish trend in the very near future. On the VIX, we dropped 1.23% today, and we continue to see the VIX getting crushed ever since we tested that resistance trend line. Remember, volatility spikes are completely normal during pullbacks, and you want to make sure the VIX is getting crushed afterward if we're resuming the bull market, and that's exactly what we're seeing. So I'm watching to see if the VIX is going to try to spike back above 20 or continues to get crushed back down towards 16 and 14. If the VIX continues to head lower, there's no reason to believe this bull market is going to roll over and die. As long as the VIX is below 20, you can remain bullish and continue to watch those critical support levels. On TNX, we were down just a little over 1% today, and I don't see anything abnormal. Remember, low rates should be bullish for the tech sector and the growth sector, and we continue to see the NASDAQ 100 and the FANG stocks doing very well in this low rate environment. I don't think any of that's going to change in the very near future, and as you can tell, TNX is in a very strong bear trend and it's continuing to head lower. On TLT, which is our bond market, we did close the gap above, so there's no more island reversal potential, and remember, the bond market still has the bull trend. Remember, these parabolic rallies are not likely going to be sustainable, but right now we did fill the gaps below, and we could see TLT climbing yet again with the low rates. Watch the bond market closely because if it goes back into a parabolic rally, that could signal another sell-off, but very likely that's over with and we're now going to see a sustaining bull rally yet again. On the US dollar, we continue to see a strong bull market with price action still over the 5 EMA and we still have the bull trend. Look for the dollar to continue to put pressure on the gold and silver market. On gold, we're still below the 50 EMA and we don't have a trend for the bulls, so continue to watch resistance at 1812 and 1829 with our downside support around 1795 and 1776. There's no reason to be overly bullish on gold at these levels because there's no bull trend and we're still below the 50 EMA. On silver, we're continuing to test support right around 25.1 and we're still above that support level. If we break below it, we could be going back down to 23 and we still have resistance above at 25.8 and $26. Above 26, we still have resistance at the 50 EMA, which is at 26.3. Just like with gold and with the strong dollar, you don't want to get overly bullish because we do see a full bear trend on silver and we are about to break down through critical support potentially. So don't get overly bullish in a falling knife scenario and don't just assume gold and silver have to go higher as long as we have that strong dollar. On Bitcoin, we did see a strong bounce off of that critical support at 30,000, but again, we still have the bear trend and we're still well below the 50 EMA. So overall, remember that Bitcoin is in a bear market, and if it does break below critical support, it could continue to go lower. So remember on Bitcoin, I'm a long-term accumulator at these levels, but that doesn't mean it won't go lower. So if 30,000 breaks down, look for support at 27,000, and below 27,000, you'd be looking for support at 23,000. Until we get rid of the bearish trend, you don't want to get overly bullish as a trader. So if you're trading Bitcoin, you need to get in and out quickly because it is in a bear trend. If you're accumulating for the long term, you want to look at these as a deal and you want to start accumulating, and the lower it goes, the more you can add. But right now, just remember it is in a bear market and we need to see Bitcoin getting above 35,000 to start reversing the bearish trend. On Amazon stock, we did get a very bullish day today, going up 1.47%, and we continue to bounce off that support level at 3,500. We're back over the 20 simple moving average for the third day in a row, and we did regain the full bull trend today. So Amazon is looking like it's going for that next leg higher like I've been talking about, which is up here at 3,800. You will still have resistance levels at 36.55, 37.62, and then our price target at 3,800. So pay attention to those levels. You have support just below at 35.76, 35.52, and 3,500, but it's very unlikely we're going to those support levels if we continue to go higher in this impulsive rally. We see a little bit of increasing volume today on higher prices, which is bullish price action. On Tesla, we continue to have trouble in paradise, and we see Tesla going down 0.92% and back to our critical support at 649, which is our 50 EMA. You can see Tesla is starting to break down below the support trend line, but again, it's just one day, and that's not that big of a deal as long as we're holding above critical support. The bad news for the Tesla bulls would be a break below critical support and coming back down to 626 and potentially breaking below that and coming back down to 594. So a break below 649 would be a breakdown in Tesla, and the bulls really need to get back over this 20 simple moving average at 665 and then break out of 692 to really get Tesla starting to run in a bull market. So your critical resistance is now 665 with your critical support at 649. And do understand there's no trend for the bears or the bulls, so do expect it to be a choppy ride, especially going into earnings. Remember, earnings is always a coin flip, so don't get overly bullish or bearish going into earnings because that's just gambling and nobody knows if Tesla is going to run higher or crash down after earnings, so don't take on too much risk. On Apple stock, we also had a bullish day today going up 0.96%, and we continue to see Apple stock closing over the 5 EMA and holding on to that full bull trend. We did find resistance right at 148, which is no surprise because you know that's a resistance level. If we break above 148, we could really get this party started and start running towards a price target at 156. Look for the downside support at 145, 143, and our 20 simple moving average is now at 142. Again, Apple is a market moving stock and it does look like it wants to go for another leg higher, which would go hand in hand with the triple Qs going for another leg higher as well. On the financial sector, we were down a little over 1% today and we're back below the 50 EMA, but we are closing on top of the 5 EMA. So we could see the financial sector regaining some strength here if we can get back over the 50 EMA and regain the bullish trend. But overall, the financial sector is finding a support level down here and it is starting to consolidate, so it could be bullish in the very near future. On the industrials, we dropped 0.37% today, but we still have the full bull trend and we still have the bullish price action above all the moving averages. On the healthcare sector, we were up 0.74% today and we continue to see healthcare looking very strong, closing above the 5 EMA and still holding on to that full bull trend. On the energy sector, we were down 1.12% today and we still have a gap to close below. Remember, the energy sector is now in a bear market and it's official because the price action is below all the moving averages and we did get the crossover of the 20 below the 50. So don't get overly bullish on the energy sector while it's in a bear market. Wait for a confirmation of a bottom and then a breakout before you get bullish on energy. So jumping back over to the S&P 500, we're very close to breaking out and retesting brand new all-time highs. So now is not the time to be getting bearish. If you're trying to short the market because you're just assuming it's going to double top or you don't think it's going to break out, you're playing with fire. And even though eventually you might be right, you're just guessing and you're not being objective. If you're looking at the price action in the trend, you have to remain bullish because they're both bullish. We have price action well above the 5 EMA and we still have the full bull trend, so there's no reason to be guessing and trying to short this market. So stay objective and let the price action in the trend be your friend, and right now you need to be a bull in a bull market or you're going to lose money. Also, don't forget I have my trade alert service that only trades TQQQs and it's called BANC Trade Alerts. It's very simple to follow and all you need to do is execute the trades yourself and you'll receive all of the buy and sell alerts directly via email and text message. I'm currently running a 50% off promo code for your first month, so now is the best time to try BANC Trade Alerts. You can find out how to join by clicking on the link in the description. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and always stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you can find out how to join by clicking below. So thanks for watching everybody. I hope you're crushing this market. And as always, I will see you in the next episode.